I'd love to be able to talk to you about how we were able to get a loan that was not eligible for qualification because of the lack of income, qualified with asset depletion. Hello, this is David Xie, mortgage broker with Nexa Mortgage and the Xie Mortgage team. You may be wondering, what is asset depletion? Well, asset depletion is when you have a significant amount of assets that can be liquidated without any contingencies, and we can use that income without you liquidating it for income purposes for qualifying for a mortgage. Let's go over this scenario right now. I had a customer that qualified for a government loan as well as a conventional loan. And based on the credit score with a conventional loan, because had a great credit score, the mortgage insurance made more sense, they wanted to qualify basically at the top of their qualification based on their W-2 earnings. With that being said, we went through the loan process and their income and the interest rates kind of went a little higher while they were going through the process. If you're going through home shopping, please be sure to lock in the interest rate if you're ready to lock it in, okay? So as soon as you get a contract, that should be something that you should talk to your loan officer or broker about. Hey, I want to lock in my interest rate immediately. They were buying a 1-unit residence, and this can be used for 1 to 4 unit properties. They can also be used for purchases, limited cash out refinances, as well as cash out refinances. The maximum loan to value on this type of product is 70% loan to value. So 70% of the value of the home versus the loan amount. And then it can be 80% if your borrower is over 62 years old. So the way that we would do the calculation on this is, let's just say you have $100,000 of eligible assets, and at the end of this video, I'm going to go ahead and send the chart over to my producers over here so that we could put this illustration on the screen. Let's say you have $100,000 worth of assets, okay? And the closing cost that's necessary for your loan is $2,500. There's a $10,000 down payment. You have, let's say, a required reserve requirement. That's how many months of mortgage payment that you have to have set aside to close on the loan. So your full distribution penalty, okay, if you're under the age of 59 and a half, you have a penalty. Let's just say that's $15,000. So then you would have the remainder of $67,500 that we can use as income that we would divide over 360 months. So follow me on this, $67,500 in total assets that are available after down payment, closing costs, required reserves, and your distribution penalty. And we divide that by 360 months, and we were able to use $187.50 in monthly income to qualify. Now, that may not sound like a lot to you, however, it is a lot, okay? Because if it means the difference of you getting a better PMI rate from a 44.9% debt to income ratio or a 46% debt to income ratio, you can thank me later for watching this video. If it means that you will not qualify because your debt to income ratio was qualified at 49.9 and your homeowner's insurance, the only thing you can find is a little higher than your loan officer used to qualify you. This could be the difference between you packed up in a U-Haul truck and not moving into your house versus being able to move into the house. Asset depletion to qualify for a borrower, retired or non-retired, is a huge thing. Definitely look into this. If you need that extra income to qualify, feel free to reach out to me and my team anytime, 7 days a week. I'm David Xie with Nexa Mortgage, and my phone number is 757-478-8493. Take care. Bye.